What's up traders, John Howell here, officialjohnhowell.com, and in this video we're going to talk about the S&P or the US stock market, and I believe the signs are coming on the charts for down we go. We're likely to get that pullback happening tonight, I believe. So let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, so what I'm seeing all over the US indices right now, ES, Nasdaq, Russell, all that sort of stuff, is bear flags on the smaller time frame charts. So, I'm seeing the market run down. Let me get I'm seeing the market run down, and then we're starting to get this sort of action where the market's creating the bear flag formation. And so, if I just do this in this color because it's a bit darker. Alright, so we're having bear flag formations, and now we're starting to break out on the downside. So that's exactly what I want to share with you in this video. So I won't sort of spend too much time here. Anyway, guys, so let's get to the charts. All right, traders. So let's have a look at the charts itself, and let's have a look at what actually happened. So last night, you can see we had a bit of a pullback. The volume wasn't too much, but I don't want to focus too much on the daily chart in this video. I want to focus more on the hourly chart. So let's go to the hourly chart here, and I want to show you the reason why I want to focus on the hourly chart. Look at this here on the hourly chart. You can actually see that firstly we've got the stochastics really built up through here, but if you have a look at the actual the chart itself, you can see how, let's just delete that. You can see how that's obviously coming in through to that whole support and resistance levels coming in through there, and you can see how we're now starting to top out a little bit more. You can see how you can see how this sort of topping action is coming into play, and so you can see that's what's happening through there. You can see that's what's happening obviously through especially through there. But there's a lot of support and resistance levels through there. But one thing I want you to see is you can see that. Firstly, look at that there. Look at it just keep hanging down, hitting down. Now, and look at this sort of flag formation coming down and it breaking down now. So I do believe we're likely to see that retracement now. If we go back to the daily chart, we're likely to see obviously a down move, and that down move should close this gap. So I'm saying we're likely to get a down move of a 1 to 2%. Not a big down move, and maybe even and that'll be the start of another move down towards here. I'm just focusing on these daily stochastics because they're starting to come down a lot, really quick right now. And I don't believe this is the start of a crash. I believe we're likely to get a pullback, but then I believe we're likely to get a race to new highs, which is allowing the stochastics to come back down, get things back in the equilibrium, and then away we go again. So that's the S&P chart. Let's go to the Dow Jones chart. This is the Dow Jones chart. You can see how, once again, that this is the top of this is the overall channel that we've been in. Let me just delete that off there for a minute. And you can see once again that we are starting to obviously hit this overall level of support, and we've been bouncing off this level for quite some time. And once again, we've been starting to create this trend line through here, and we're at this level through here right now. If we look at the daily chart, once again, we can see how it's just sort of hitting on that level very close to the 200 moving average as well too on the daily chart. So that's obviously what we're looking at there, and what is happening through there on this chart as well too. So I believe we're likely to break down, and we're likely to start seeing some movement on the downside on that. Looking on the hourly chart on the Russell, you can see how that it's starting to form this sort of slight lower peak. We're at this level right now, so I believe we're likely to break that level and start to head back down to at least this 117 mark. Going back to the daily chart, you can see here that that's where it's at right now. So if we do have this sort of level through here, you can see this level through here, then I believe we're likely to start seeing that being broken, and we're likely to start getting some downside on the Russell. Moving forward through the Nasdaq, is either this is the daily chart. Nasdaq has a huge gap Okay, and the gap is obviously, this is where the gap obviously ends. Let me see if I can just do that, this other here. So that's obviously where the gap ends, and you can see that's where, so that I do believe the Nasdaq's going to close that gap. And you can see where it's at right now. You can see, especially on the Nasdaq, right, it's really having problems breaking up there. We do have a little bit of support through there as well too, but I do believe, based on what we're seeing here, we're likely to see that pullback coming into the markets through there as well too. And obviously you can look at the SPY. The SPY is doing the same thing as well too. If you look at the daily chart, you can see how the SPY, again through there, we have this small little gap that is likely to be filled, and then later on maybe even this gap will be filled as well too. So yeah, so anyway guys, that's basically what I do see with the SPY. Looking on through the other charts that I normally look at, which is the advanced decliner line chart. The really interesting thing is, guys, is this. Now I want you to look at a correlation, and actually let's just do this here. Let me bring up this one here, and I'm just going to try and bring up two different charts. Let me bring up a new chart here, and I'm just going to click on a blank chart through here, and I'm just going to put it through here, and I'm going to have, let me bring up, so there's nothing actually on the chart itself. So let's just delete that. We're just going to make this black, and I want to show you this, guys, because it really is something interesting. That, yeah, one color, let's just go black. Okay, and same with this one here as well too. Edit, open, highlight, close, one color, black. All right, cool. So let's actually do this. We're looking at the advanced decliner line on the left, and I'm going to make this so it's not linking to the other one. Let's just click on, actually no, let's just leave this in here. We're going to think no link, so we're going to keep that link there. Okay, and we're going to, let's just squeeze this up a little bit so we can really just get an overall better view of what this is doing. You can see now, you can get a better view of it. And we'll do this the same for this one over here as well too. We're going to make it so it doesn't show any trend lines. And what I want to do is, I want to, let's see if I can I add a, let me see if I can add a watch list here. Let me go to my watch list. Let's go to personal. Let me bring up my index. All right, cool. So let's bring up this one here. The interesting thing is, guys, is this. Okay, so we're looking at the S&P 500. This is the daily chart over here. Okay, and I want you to look at the clear divergence in what is happening with this market. And think about the advanced decline line is obviously the overall stocks of what's actually happening overall. And if you look at the advanced decline line from the high of May, where we're at, to where we're at right now, it's only retraced to the 50% retracement. It's only 50%, not even 62%, let alone be at the highs. But look at the S&P, it's almost at its highs. Okay, now, look at the Dow Jones, almost at its highs. Russell has been the lagging one, right? So we're not getting all the indices. Now, if you look at this here, right, there is a clear divergence in what is happening here. If you look at the S&P 500, we see in May, like the advanced decline line, it was going up. Same with the S&P 500, it was going up. Dow Jones, look at that, May, going up. Russell, look at that, May, all going up. Look at this here, Nasdaq, May, look at or May, you can see May, and actually even June, July actually kept going up as well too. But you can see what I'm saying there, right? They're all going together. That means something. That means it's obviously, yeah, they're actually in line with what the overall market is doing. Okay, so you can see that there, but you can see on the advanced decline line, which is obviously gives you a guide of what's happening there. You can see a clear divergence of what is happening through there. That to me is a very weak sign, by the way, guys. It really is. Yeah, and I think it's only like 25% of the stocks is counting for this move to the high side, and then the rest moving to the downside. So that's something I wanted to share with you. I wanted to give you a market update. I think down we go tonight, and also wanted to show you the divergence or the convergence, whatever you're going to call it, for the advanced decline line on the charts. But then also, guys, I want to give you a bit of a caveat. Yes, I am bearish on the market, and yes, I do think we're going to go down and all that sort of stuff. Okay, now let me bring up this chart here, and let's go back to the hourly chart. The hourly chart. There we go, hourly chart. Here's what I am saying, guys. Okay, and I'm going to say this on the whiteboard as well too. But one thing I want to say, guys, is that we can see this level of resistance all through here, okay? You can see how it's been having problems all through here. Here is what I'm saying. Right now I'm bearish, and we're likely to flip to the downside, and we're likely to continue down and probably even get down towards this line through here, you know, and over the next couple of days. It may even happen in one day, you know, and so it's only a 2.5% drop, so it's not that big. So it may happen over 1 or 2 days, may happen over 1 day. What I am saying, guys, is this, is that I know that this is a bullish move. I know we are definitely on a still bullish move. So I'm bearish here now, okay? But if the market starts to close above this resistance line here, if it starts to close, if this hourly chart starts to close above this here, then now instead of me selling, and I'm now buying, and if that happens, then we're likely to see the race back up to new highs and even a newer high than back here a couple of days ago, or the start of November. Makes sense? So that's what I do see on the charts, guys. That is my technical argument of why we're likely to see more downside for starters. But again, no matter what I say here, if we do start to flip and we start to get a close above here, then we're likely to see this move back up, and we're likely to see this type of action. Now, it won't happen like that, but you know, you're likely to start seeing a move to the high side. Again, go back to the daily chart. You can see clearly what is happening through there as well. So there is a bit of support and resistance here on this daily chart right through here. You can see where it is right now. So there you go, guys. That is my technical argument for what I see moving forward through tonight. Have a great day. So, traders, my personal opinion and my thought is that we're breaking out of the bear flags. We see all over US indices, Dow, Nasdaq, Russell, down we go tonight. Tonight, I believe we're likely to see that crack. We're likely to see the move down of what we've been trying to look for quite some time. We're seeing on the daily chart it's starting to hesitate. We're seeing on the hourly charts and so on and so forth, we're starting to hesitate. So down we go tonight, and that's what I absolutely strongly and firmly believe in with that. So, but there is always a caveat, and I may be wrong here, and so that means this: we're breaking out of the bear flag right now. And as you know, the market's gone like that, and then we're broken out. This top here is resistance. If the market suddenly doesn't go down like I think it's going to, like everything on the charts saying it's going to go down, if the market does go back up and above this resistance here, then I'm changing from bearish back to bullish, and then I'm back up. Why? Because every trader needs to be flexible and needs to have a flipping or exiting moment. And that is my moment for that, okay? So yes, down we go, but if the market does start to change, if the market does start to flip up back above that resistance, then yes, I'm now going back to buyers, I'm going back to bullish mode, and then up we go. But I'm seeing the market's due for that pullback. You know, a lot of the stocks have done like 12%. I think a lot of the stocks, especially the S&P 500, they've done like 12% increase in 30 days. We know there's a pullback due. We know that's happening right now. We know the market's at a point right now, and we can see it on the daily chart that's actually struggling a bit right now. And the hourly chart, we're seeing those bear flags coming in all over the place. So I think down we go. It's actually breaking out of the bear flags right now. So I think down we go in the markets, and I think that if we do start to break above that resistance line, okay, if we do start to break above that resistance line, then yes, I will be personally flipping from bearish to bullish. Now, I don't day trade, I don't get in and get out and stuff like that, so this is just my view on what's going to happen the next day. I personally trade the daily stock market myself at this point in time anyway. But I'm just letting you know, I'll let you guys know, okay, if we do start to flip and we start to get back above that resistance, I am bullish, but for right now, everything is saying down we go, and I believe we're likely to see that pullback, and the SPY is likely to fill that gap, and Nasdaq is likely to fill that gap as well too. Anyway guys, I'm out of here. Remember, success can be yours if you go clap, so step up, take massive action, and face your fears today.